Good morning, viewers. It is Saturday morning again here on Women Now. Today on Home Now, we'll be speaking with Roger Bakshi, who's the broker CEO of Calcoast Financial. Today we'll be talking about financing investment property. Last week we spoke about finding investment property, and today we will talk about how to actually obtain these properties. So we're sitting here with Roger Bakshi, broker, owner, CEO of Calcoast Financial. Last week on Home Now, we talked about investment properties in Silicon Valley. Today we're going to talk about how to finance these investment properties should you want to buy one. So Roger, please define investment property for us. We were talking about, prior to this interview, we were talking about residential versus commercial. What is a typical residential property?
Well, a residential property is the one which is used for living over there.
Right.
And then the classification of residential property is 1 to 4 units.
Okay.
So one would be like a single family detached house, and 4 units would be 4 dwelling in one building. So
like a
fourplex, or you can also have duplex, which is like 2 units in one building.
Right.
And similarly 3 units in one building. So that's why they are called 1 to 4 units.
Okay.
And the reason for that is these 1 to 4 units residential properties have to conform to Freddie Mac's underwriting guidelines.
Right.
Because the rates are comparatively low as compared to commercial properties.
Right.
Commercial properties would be like anything which is over 5 units, like
Right.
apartment building, warehouse buildings, and all that stuff.
So interest rates would vary for that.
Of course it would.
Yeah.
1 to 4 units rates would be a lot lower than the other commercial properties.
Okay, got it. So when someone is thinking about buying an investment property, what should they do first?
Oh, Kajal, they have to see what kind of resources they have, what kind of money they want to invest in the commercial properties. So that is the first step, and they have to see in which investment product they should invest. Either they can buy stocks,
Right.
which could be very speculative if you're not well versed in the financial markets, or you could simply put the money in your CD account or savings account in the bank, which is very safe.
Yeah.
But the only issue is you don't get much return on that investment,
Right.
Especially in this environment where you get maybe 0.5% if you have a certificate of deposit in a bank, or savings you get nothing.
Right.
So then you have to see what makes most sense for you. So real estate is a very viable investment opportunity, but you have to be cognizant of the fact that where you are investing,
Yeah.
what is the location of that property, all that, of course, you covered in your segment on investment properties. So today we are just simply talking about financing these 1 to 4 units properties.
Right. So when thinking about investment property, what should one think about in regards to down payment? Because I know with buying primary residence, you can go from anywhere from 3.5 all the way up for down payment. But what about an investment property?
For investment property, minimum 20% is required.
Okay.
In good old days, you could get an investment property loan with even 5% down, but that era has changed.
Yeah.
Nowadays, you can get a loan, but you have to put minimum 20% down payment.
Right.
And that applies to condominium or a single family. So that is what is available right now.
Okay. And so then on that note, I know a lot of my clients, a lot of my investors, they debate condo versus townhouse versus single family. And I know the down payment varies with condo based on rentability, based on the HOA dues, etc. What would you suggest as investment property? Any rule of thumb in regards to how much you want to spend on a condo versus townhouse versus single family?
That's a good question. So that's where the resource of the investor comes in,
Right.
how much money they have. Typically, when people buy investment property, they tend to buy fourplex or a condominium,
Right.
Because those are easy to rent, and the prices are comparatively lower as compared to single family house.
True.
And also location. They have to see where they want to invest that money.
Yeah.
So if you go on the outskirts, maybe you can get a lower price investment property versus buying it here in the Mission area. It'll be hard to find condominium or fourplex in Mission area. So
Right.
it all boils down to the location.
Yeah, absolutely. That note, when we think of investment property and appreciation, should clients think about the positive cash flow aspect on a monthly basis, or should they bank on the capital appreciation?
So that also depends on the, I think, age of the investor.
Yeah, true.
If it's a younger person, that person can maybe buy it for a longer term investment point of view. But if it's an older couple, then they would be looking at the cash flow of the property. So that all depends on the individual, what kind of individual that is, and then maybe you can guide them, or when they're ready for financing, then we can answer all those financing questions.
Right, absolutely. So in my case, a lot of my clients who are younger, when they have a kid, I feel that by the time the kid is 1 or 2, they start thinking about perhaps buying a condo under kid 1's name. And then when the second kid comes along, they buy a condo for the second kid. And then they plan on keeping the property for about 18 years until the kid goes to college. And then they can either sell it at that point or they can hand it off.
Yeah, no, that's a very good investment opportunity, because real estate, as you know, Kajal, appreciates at least 5 to 10% per annum in a good environment or in a good economy. So with that in mind, like if the kids are going to go to college and college costs you a fortune, so at that point maybe they can sell that condo, and whatever gain or capital they have made on that investment, they can cash it, and that can be used for the kids' education.
Yeah, absolutely.
But with the older folks, they have a different objective.
Yeah.
So they have to see, what kind of cash flow they can get currently to support their lifestyle.
Yeah, right. And I think when we're talking about the appreciation on a yearly basis, 5 to 10% is great, depending on location, of course. But when things don't go so well with the real estate market, which we've seen, they go up and down. When things don't go so well, just remember you're an investor and you're purchasing your property. It's going to be rented out. You're not worried about the month-to-month price appreciation or depreciation. What you want to see is the yearly, what's happening year over year over year. And I think a lot of my investors, they have a long-term goal of holding on to the property. I think short-term holding on to investment property is probably not a good idea.
It doesn't make much sense.
Yeah.
So at least the rule of thumb is that if you can hold it for at least 2 years minimum, then I think that'll give you a good return on the investment. Of course, depending on the economy at that time and all that comes into play.
Yeah.
But nobody has a crystal ball.
Yeah.
But investment property, talking to a lot of people who have had investment properties, majority of them have done very well.
Yeah.
As compared to parking their money somewhere else. I think in this one they have 2 opportunities. Number one is that property gives them a monthly cash flow, like the rent they collect.
Right.
And number 2, over a period of time, the equity of the property will be building in.
Right, of course.
So they can cash out after 3, 4, 5 years. Let's say they want to sell it and get the money back. So that gives them that opportunity.
Right. Moving into interest rates right now, what are interest rates looking for example, a single family investment property? Just an example, I know rates change every day.
Daily, but in the last few months, the rates have come down. And I mean, just a ballpark would be like 3.75 to 4.625, 30-year fixed.
Depending on the property.
Depending on the property. And I think 30-year fixed rates are so low, so it makes more sense to lock in the 30-year fix at this time instead of going for adjustable rates.
Yeah.
So that is not recommended for investment property.
Got it. And when clients are thinking about monthly payment for their investment property, very similar to primary residence, but as an investor, there are certain things that are tax deductible, like I know your HOA. What else should they consider in regards to monthly payment?
In addition to the principal and interest payment on the mortgage, they will be responsible for the property taxes.
Right.
And then HOA is a significant amount.
Yeah.
It all depends on the project. What is the homeowners association fee, which they have to pay every month. And of course the insurance, the renter's insurance they have to buy.
Right.
So all those numbers can be spelled out based on the purchase price of the property, and they can sit with the loan officer or the lender and go over the details. What will be their monthly commitment, including all these expenses.
Okay, so I have a scenario that a lot of my clients go through. They buy a condo or townhouse as a first-time home buyer, and when they're ready to move up to their second property, which is usually a single family, they want to turn that condo or townhouse into an investment property. How does that work financially?
But that works beautifully in the sense that now the need has grown, or maybe they want to buy a bigger home, and they can use the existing house which they'll be exiting out of and moving into a bigger home. They can rent it out, and that way, that rent will cover the mortgage payments and the other expenses associated with the condo. That could be one scenario, but it all depends upon their economic situation.
Yeah.
If they can sustain 2 mortgages and not be struggling with the cash flow.
Yeah.
So that's where they have to sit with the lender and go over the numbers.
Right. I've also had another situation, I don't know if our viewers have ever heard of it, 1031 exchange. It's when a particular person owns property, investment property, and they are selling it for a profit, and that profit turns into another investment property. Can you touch upon that a little bit?
Let's say if somebody bought a condo for $300,000, say 6 years ago, and now that condominium market value is say $400,000. So after paying the commission and expenses and all that, let's say they net out $60,000 net profit. So they'll have to pay tax on that $60,000. But if they want to defer that tax, they'll have to buy a similar property where they can, for a higher price. That way the taxes will be deferred. So they will not have to pay capital gain tax on that. But I think for that, the minimum holding is at least about 5 years.
Yeah. So any clients out there that are looking for investment property, have any questions, feel free to contact us. Our information is online, www.calcoastmtg.com, and my website is www.kajalshahani.com.